What's going on YouTube? My name is Ernesto, and in this video I'm going to be showing you guys the top 2 tech stocks in my opinion that are going to give you huge returns in the next 5, 10, 20, 30, 40 years down the line. You don't want to be in the future, looking back wishing that you had bought the stocks at this price that they're at right now. So go ahead and stay tuned for the video. Stay tuned for the 2 stocks, and let's get into the actual portfolio to show you guys. Today we are at $14.71 plus 2.25%. For the week, we are up $154.71 plus 2.66%. For the month, we are up $972 plus 19.46%, which is freaking awesome. Green days like this are awesome. As you can tell, the market's starting to come up more. So you're probably going to see an increase in your money because the money that you invested in the companies when they were probably at the bottom of the market. In the past 3 months, we are up $914.92 roughly, plus 18%. And I've only started about 6 or 7 weeks ago, so that's why it's not 3 months, it's shorter than that. So again, if you guys haven't signed up for Robinhood, or you want to start investing, or you're thinking about investing, I'll have my link down in the description below. Go ahead and click that. We'll both get a free stock, and we have a chance to get stocks up to worth, I think, $150 or like $250. So it's a pretty good chance. All right, so here's a spreadsheet I made for you guys. So I got this idea off a different YouTuber named JJ Buckner. So if you guys haven't seen his videos, go ahead and subscribe to him. I'll leave his link in the description down below. But I made a little twist on it so I can make it my idea also. So let's go ahead and get right into it. As you can tell, the first 2 stocks we're going to be looking at are Microsoft and Apple. They are both in the information technology sector. And so I listed a couple of things on the left and some numbers. I got these numbers all based off of Seeking Alpha. So I'll go ahead and describe each category and talk a little bit about it, and then we'll keep moving on. So the first one we're going to be looking at is market cap. Microsoft had a market cap of 1.39 trillion, while Apple had a market cap of 1.38 trillion. In the past 3 months, Microsoft was leading the way on market cap, but recently Apple took them over and got that #1 spot. I was not able to find the actual numbers, so Apple is in the lead of market cap in front of Microsoft right now. Next is the 52-week high. Microsoft's 52-week high is $190.70, while Apple's is $327.85. So as you can tell, the more expensive stock to buy at the high and even at the current price is Apple right now. And the 52-week lows were $119.01, and Apple's was $170.27. And the open as of 29 May 20, where the stock opened up at that price for the day, was $182.74 for Microsoft and $313.97 for Apple. So again, Apple is still the more expensive stock to buy at their high and at their low and current price. Microsoft has the higher market cap. Market cap is the price of one stock times the number of outstanding shares. And that proves how big. So from that, you can tell the size of a company, and you can prove how big it is or small it is, whether it's a smaller market cap, medium market cap, large market cap. You can tell from that. And basically that proves that the company is pretty reliable since it's grown pretty large. It's a well-known company. People are trusting into it, so they give their money to that company, and they're shareholders now. YTD price performance, that is year-to-date price performance. Basically that means from the start, so that's not a year from this day, that means from the start of 2020, the stock price has grown X amount. So right here, Microsoft's is at 16.20%. So from the start of 2020, Microsoft grew 16.20% in price, while Apple grew 8.27%. So Microsoft wins in this one because, they grew at the higher price performance from the start of 2020. And looking at the 10-year price performance, Microsoft grew 610.27%, while Apple grew 766%. So in this one, Apple wins in the past 10 years. from where they've come to where they're at now. Either way, still both stocks have grown a lot. So that's just a number that I use for the year-to-date price performance to tell if the company is growing, if it's reliable, sustainable, if it can keep pushing further and projecting more growth. So now looking down a little bit, year-to-date return. So that is so you're just gonna look at the charts when you're on Robinhood for your different stocks, and you're gonna look at the day, the week, the month, the 3 months, and the year, and then you can see the 5 years. So that's just gonna be the total return that you've got from the amount of money that you put in for each share. So Microsoft has grown 16.84%, while Apple has grown 8.82%. And for the 10-year return, Microsoft grew 799.1%, while Apple grew 900.80%. So again, they're both very high. They're pretty close again. But Apple wins in this one because they grew the higher percent. So you get more return for your money if you invested 10 years ago. So looking at total revenue, Microsoft's total revenue is 138,699,000,000, and Apple's total revenue is 267,981,000,000. So right there, Apple wins in that category for revenue, money coming in. But the cost of the revenue for Microsoft is 44 billion, while Apple's is 165 billion. So Apple has a lot more cost to provide that revenue that they're bringing in. And from that, you get your gross profit and your gross profit margin. So the gross profit is basically just a number value. So you're subtracting it, and that's how you get your gross profit. So 138 billion minus 44 billion is 94 billion. And then you're going to get your gross profit margin from converting your gross profit into a percentage. So all you're going to do is just get your gross profit, divide that by your total revenue, and then you're going to multiply that by 100% to get it into a percentage. And the gross profit margin for Microsoft is 68.17%. And then looking at Apple, their gross profit is 102 billion, and the gross profit margin is 38.11%. So right there, that proves that Microsoft has had the higher gross profit margin, and they have less cost of goods to bring in their revenue. Now looking down a little bit, total current assets and total current liabilities. So these two provide numbers that you can use for this current ratio that I have right below it. So Microsoft's total current assets is 170 billion, while Apple's is 143 billion. Total current liabilities for Microsoft is 58 billion, and for Apple it's 96 billion. So you get these two numbers by dividing total current assets divided by total current liabilities. You're going to get your current ratio, and what your current ratio shows you is the amount of liquidity that is in the company. So if they have more current assets, they can pay off their debt, all their other liabilities that they have, current, long-term, all that stuff. So right here I have 1.2 to 2 is good, decent, and average. So if it's a little higher, maybe that might mean that the company's not using their total assets in the right way, and they should be using that better. But if it's right in the middle, then that's pretty good also. I don't think Microsoft's doing anything bad by that. Even though it's over the 2, they're still a very great company. I think they're doing a lot with their diversification and all the different things that they're dipping into. So for example, Microsoft, everyone knows Microsoft is Microsoft Windows. They just came out with Teams during this whole COVID. They have AI technology with Azure, and they just teamed up with FedEx to, I think, try to take on Amazon for that #1 spot. Maybe they can come up and get close to Amazon. But on the other side, Apple, everyone knows Apple has their phones, their Macs, their laptops, their stores, which were recently, a lot of them were vandalized, so a lot of them are closing down from all this, everything else that's going on. Now looking down a little bit, so for me, I always want to look at the dividend yield. I don't want it too high, I don't want it too low. I don't want so much risk and volatility, so I want to kind of keep it around 3 to 4, or actually around 3 to 5. But right here, these are a little bit lower because these are growth stocks. These are blue chip type stocks. These are not dividend stocks. So even though they have a dividend, that is a great thing for me because I am a dividend investor, passive income. I want my money to work for me and to get me more money back so I can invest right back into it. Dividend yield 1.11% for Microsoft and 1.03% for Apple. The payout ratio for Microsoft is 35.85%, and for Apple it is 26.53%. And the payout ratio basically means that is the percentage of earnings paid to the shareholders. So they find that by dividing dividends per share divided by earnings per share, and that's how you get your payout ratio. Right here, I have on the side 35 to 55 is good. I think 35 to, some people say that, some people say 60% is good. So anywhere in between there, 35 to probably about 60 or 65 is pretty good. So they're not, blowing all their money and giving it back to the shareholders and not investing any back into their own company. So the annual payout for the dividend yields provided right here. Microsoft's annual payout is $2.04, while Apple's is $3.28. Again, Apple is the more expensive stock, so they're going to give you more back for each share. So years of growth, Microsoft is sitting at 16 years of growth. Hopefully they can keep growing that and get in the dividend aristocrat and the king category, which would be pretty awesome. And Apple sitting at 7 years of dividend growth. So overall, I think these are both two really great companies to invest in. If you have the money, I would definitely put it in these. For myself, I'm in Microsoft. I would love to be in Apple, but I just want to put all my chips right now in Microsoft. I love them. I love what they're doing. I love how diversified they are. And I just want to keep growing with Microsoft. So if that helped you guys out, go ahead and drop a like down below. Please, that'll really help me out. That'll get me out there more. Subscribe if you haven't. And go ahead and leave a comment if you have anything to say. I'll try to comment back to you guys. And thanks for watching. Go ahead and stay tuned for the next videos. Thanks.